Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today I have a members video for you where I used my son's account. We went ahead and did a in the money covered call on CONL. CONL is the 2x leverage ETF to Coinbase. We use Coinbase all the time, but we use CONL to trade it because it's a 2x leverage ETF to coin. Absolutely love sending out all my kids' trades to my members because they're smaller trades, what I call small account trades. I'm going to explain exactly why we did the exact trade that I sent out to the members. Now look, before we get there, I want to show you where we're at this year. You know, the members get all of my trades. They see every single trade in and out. So a lot of the members copy my trades. The trade I just sent out that you're going to see a video on, they got it. And a lot of people will do the exact same trade because they see why I got involved. And then, of course, they see when I get out of the trade. And they can see everything with the real-time blog post, email, and phone app for which all of my trades are sent. Now, you might be thinking, how good is he? I'm going to tell you this. I'm not a trade alert service. I trade my own money, and every nickel I put at risk, it's money that I use in retirement to live. See, I retired when I was 55, and if I'm not good at this game, I'm going to have to go back to work the 9 to 5, and we're not doing that. And when I invest my kids' money, well, I can't lose money. It's my kids' money. So we will not lose. It's a mindset, and we absolutely are going to make sure we put on the best possible trades. Now, being a member, you get to see that. And whether you take on the trade or not, totally up to you, but you're getting all of my trades. I want you to focus right here in the green column. First of all, those are all my closing dates right here. So these are my most recent trades, and you can see that the green column represents the profit for those trades. We are having an incredible year, one of the best I've ever had, blowing away last year's numbers. So if one of your biggest problems is finding great stocks to use, great entry points to get involved in those stocks, and then of course, staying in the game, then you need to join my membership. CPTdashboard.com, click Upgraded Dashboard. I got a 1 free month offer, a 2 free month offer, and a 3 free month offer. Join the membership to have access to everything that you don't see here, including members' videos that you're about to see next. They got this 2 days ago. They're already benefiting from what you're about to see. Hey, look, go to CPTdashboard.com, get your 1 free month offer. Would love to welcome you aboard. Now, I'll turn it over to him to finish the show. Hey, welcome back everyone. Let's talk about a recent trade I did just now for my youngest son. It's a small account trade. These accounts aren't so small anymore. We literally started with $10,000, what seemed to be last year, and he now has over $80,000. This is ridiculous. These trades present themselves to me. We don't spend much time thinking about them because we do them in my main account. I'm in retirement and this money is real. So when I put my own money at risk, those trades can be done with my kids' accounts as well. Because again, I have the absolute mindset I cannot lose. We win, we lose, but I can't lose. That's the mindset. So we put our money at risk when it best meets the criteria. And right now we're going to talk about Coinbase. And of course, we are using the 2x leverage ETF COIN L. I don't want to spend $190,000 for 1,000 shares of Coinbase when I can use COIN L and get 2x the move. To me, it is the holy grail of trading. This is where, if we pick great entry points and we just keep staying the course with what we're doing and we don't get out of our lane, right, overreach, get a little risky, we can make twice the covered call premiums and profits than we have over the years. And COIN L's one that I use. Now, let's talk about this trade because how can you benefit from it? Now, I use a covered call largely because, and you need to understand why I use the in the money covered call. A lot of people ask me this. Why do you do the in the money covered call? Well, there's two reasons. Right now, I'm bullish on the market, but there are nasty bear pullbacks. These things can pull back 10 and 15%. This is literally 2 steps higher, 1 step back, and that 1 step back can be 1,000-point down days on the NASDAQ. That's where we're at. The numbers are so big. This is where we're at. So I like having a little downside protection. To me, this is the absolute holy grail trade right now because you can get decent covered call premiums and you're still getting the downside protection where I buy the shares in this example, 27.44. I'm giving them away at 24. So I'm collecting $3.44 in downside protection, which means the stock can literally fall to 24 and I haven't lost a nickel. And we collect a decent premium. What's the premium? The premium in this case is going to be $840 in a week. Actually, it's not even a week, it's 4 days. So this is what I love to do. We pick up little crumbs. Yeah, I could have bought the shares at $27.44 and write an out of the money covered call, probably pick up $2-3. Life's good. What happens when we get the pullback? Which you know is going to happen. How can you have Bitcoin going from 57,000 to 67,000 without somebody taking profits? We stay disciplined. We keep our expectations a little bit lower. We can still profit. And that's what I do. So to me, this is the absolute holy grail trade. I love it. We're doing it with every one of them. And I know a lot of you are saying, look, you could have made so much money when it was trading at 19 and now it's at 27. And look, we pick up crumbs, 1 crumb, 2 crumbs. Next thing you know, we're talking real money. And what we want to do is stay disciplined in the strategy where we give ourselves a little downside protection. How great does it feel that the market is rocketing higher and you're worried that you're going to miss this run and you don't get involved? See, we get involved at the top here only because we understand the trade. I'm going to explain the trade here in a minute. But we understand the trade and we understand there could be a pullback all the way back to 24. That's beautiful because our cost basis is 24. This guy paid me $4 and most of that is intrinsic value. The difference between where I bought it at $27.44 and where I'm giving them away at 24. He paid me that. That's in my pocket right now. It's not profit. Oh no, that's not profit. But he paid me the downside protection. So now I could care less if this thing goes higher. And to be honest with you, I don't even mind if it falls. As long as it falls in and around my $24 strike. Why? We can get off 2 trades. This is a 4-day trade. So we're talking coin has to fall 6% just to get COIN L 24. See how that works? Coinbase has to fall some 6% for COIN L to get to 24. Now, the trade ends. We probably let it go into expiration. Come Monday, we still own the shares at 24. If the stock were to fall below 24, but my take is, even if we did, that's a 6% drop in Coinbase. Probably the selling is starting to get tired. Right? They're literally selling this thing off some $12. All of a sudden, we're going to get some bottom feeders coming back in. And 24 for COIN L might be a great place to write a 30-day covered call. And basically right now, a 30-day covered call on COIN L at the money. Again, this is presuming that the stock were to fall to 24 and at the money strike for 30 days is going to pay us about $5.50. So we get paid the 60 cents in time value premium here, making $8.40. Then at 24, we sell an at the money 24 or our cost basis 24. We're going to get $5.50 divided by that 24. That's 22%. I mean, those numbers are real. They're not fake numbers. And do the math on that. If we have 1,500 shares and we're going to times that out by 550, because at that point, it's all premium, that's going to be an $8,200 trade. The stock has fallen from $27.44 in 4 days. It's exhausted its trading to 24. Now we're writing a 24 covered call, and now we're collecting some 9 $1,000 in 34 days. 34 days. Take the 840 here and the 8,200 there. You're looking at $9,000 on a $24 investment, and that's in 34 days. And look, for me, it's Bitcoin. Yes, Bitcoin's moving to the top of its range. Yes, COINL can fall from 24 down to 19, but I own the stock at 31. I have the stock at 31 in two different accounts. For me, it's okay because you know my stance on Bitcoin, and you know I feel Bitcoin's going higher. In fact, I believe Bitcoin's going to 70 plus thousand. That's exactly why they've moved MicroStrategies into the stratosphere on an expectation that this trade moves higher. Now, let's finish this up. You know why I'm in this trade. In fact, my son has a 19 in the money covered call that expires this week. We're going to buy that back. He's going to make $1,200. Great entry points. We're picking fabulous entry points, and we're not getting suckered into getting involved up top. We are getting involved from the midline down. And you could say, well, you know, at 27, you're getting involved here at the top. But what did I do? I wrote the in the money covered call, which is going to be the midline. We're playing the midline and below. We're doing this with TNA as well. I told you TNA is going to have a 46 to 40 number. We got involved at 42, 43 with a 40 strike. We are using the midline and below because this market, again, 2 steps up, 1 hella step back. Now, yeah, we may be going higher. Feds are going to lower rates. This market is probably going to move higher into the late parts of the year. And by the way, I'm on record about mid-January, we're going to sell off, and we're going to sell off big. Be ready. I'll be talking about that in the coming months. It just happens. You have to understand Wall Street takes profits. If you don't understand that or buy into that, you are just going to be ragdolled all the time when these things are ripping higher and you feel like you're missing out. See, I don't feel like I'm missing out. Not at all. I'm staying in my lane, doing what I do, picking up crumb. There are 8,000 stocks I could be using, and most of them are trading at the midline or below. What we're seeing in the stock market right now are the big heavies moving higher because Wall Street feels comfortable trading them. But there's a lot of great stocks out there that are not, and we could benefit from it. So just make sure you don't get sucked up into that. Now, just to finish this up, how can you benefit from this? Clearly, anytime I do an in-the-money covered call, you can do the same cash secure put strike price and expiration. Because although I got paid $4 up front, that included the intrinsic value. The put side of it will show you pure premium because this is an in-the-money strike on the covered call, so I have to be paid intrinsic value plus my premium. You doing the put, it's an out-of-the-money put. And right about now, at the time of this printing, you could have got the same. This is a 60-cent time value premium profit, not $4. Learn that. A lot of people are like, wow, you made $4, but the numbers don't match up. You're only making $840. Remember, intrinsic value, nobody makes money. It's the time value premium. And with a cash secure put, you would have made about 60 cents on this trade. Very conservative, out of the money strike. We pick up that crumb and we move on. Look, I have learned over the years that we get snapped off when we get greedy. And for me, the in the money covered call is absolutely the best way to start a trade, or the cash secure put. Now you say to yourself, why do you take on the risk of buying the shares and doing an in the money strike? Why don't you just do cash secure puts? I have so much money moving, I have no settled money. So what happens is I can buy shares on margin or on margin in my IRA account for which they can't charge me margin debt. It's just letting me use my unsettled cash coming back in about 3 days. I can buy the asset and do the in the money covered call. When you write a cash secure put, you need the settled cash. That's why a lot of times I do the in the money covered call. He didn't have enough cash to do the cash secure put because we just closed 2 trades. However, on margin, because the cash is coming back, right? The cash is coming back because those are closed trades. He's not charged margin debt. I want you to understand, we're not using margin. There is no extra margin being used. He's using the money that's in his account, and that's it. The only thing we're using here is unsettled money, which my brokerage already knows is coming back. And in an IRA account, you can't use margin. There is no margin. What they do is they extend you the right, and they call it margin, to use your unsettled cash to day trade or swing trade. That's all they do. So when it's time to do a cash secure put, if I don't have settled cash, I can't do the put. I have to buy the shares, write the in-the-money covered call. They are one and the same. Now I will tell you this, covered calls might get 1 penny, 2 penny, even a nickel more than the put. So where I got 60 cents here, with the stock rocketing higher, you might get 55 cents. Hey, green days, calls are rocking. Bad days, puts are selling. Understand that, plan, and trade accordingly. Now, again, how can you benefit? Well, you're going to benefit based on this here, my belief of where this market's going with Bitcoin. And again, we want to use the midline to below. If this is COINL's sandbox, and we just got involved at the top of the sandbox, and where I believe the midline is 24, notice we didn't buy the shares and write an out of the money covered call or an at the money covered call, not giving us downside. Now you could say the premium's downside, but I don't use premium for downside. What we do, we buy the shares, we use the 24 for downside, we then collect that decent premium for 3-4 days. If we're stuck holding the shares, we have a great starting point for the next 30-day covered call. Hey, look, when you get these small ball account trades, think of it in terms of 100 shares, 200 shares. The money starts to get big when you have success. But we all started with one trade. I did, they did, you did as well. What I want you to do is look at all these trades in terms of your bankroll. Your bankroll is the most important thing. You have to protect your bankroll. If you're leveraging up on a trade like this, where you might use 50% or maybe 100% of your bankroll, I want you to step back for a moment and truly identify what I've been doing here. We are all about diversification as much as we can. Right now, he has 3 trades on the books, trying to be a little diversified. I myself have some 13 to 15 positions. So slinging 1 and 2 stocks only, what I would hope is even if you did use 1 or 2 stocks, you're using little bits of your bankroll on every single trade. Maybe 100 shares, 200 shares, 1,000 shares, 1,500 shares. Not loading up. Okay, we don't want to absolutely load up. What I'd rather do is make a little crumb here, a little crumb there, and we're able to manage those trades and move on. Hey, look, use these trades alert to your advantage, whether it's the put or the call. Understand why I'm getting involved in the trade. Do not just copy my trade unless you understand why I'm doing it, because that's when you can buy in, stay the course, and understand the trade. If you are literally just copying trades, then you're never going to learn how to do this. You're literally being fished for instead of learning how to fish, learning how to eat for life. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.